Hi, everybody. This is Gary Dean, and this is our nightly video report for Thursday, March 10th, 2016. Um, Pretty much a little bit of everything. If you were, a bear, you were a little happy at some point. If you were a bull, you were happy at some point, and we pretty much closed right where we started. Now, the couple things that I look at is that the Bulls had all the reasons to continue higher. They got everything that they wanted out of Draghi with the bazooka. It seemed like everything they were trying to accomplish with the negative interest rates backfired because I believe that the euro was up and they're trying to push it down. Equity markets, they sank after that, and then as we continue to see the dip buyers step in, and they pushed it up, and then any shorts that kind of figured it out, they covered, and like I said, we closed the day early. But to me, I'd kind of yes, I want the markets down, so I may be a little bit biased. So, I will tell you that I'll disclaim that up front. But, like I said, the Bulls had all the reasons in the world to ram this thing into the next resistance zone, which is really 23 for the S&P, and they didn't do it. So what was the reason on it, and what's going to be the catalyst for the next move? I don't think they caught all that many shorts, with today's big move down. So I'm not sure what the rhyme and reason for the down and the up on it. I mean, the down, I can give you technical reasons. The up part, I'm not really too sure. But anyway, let's get started. So, first thing, money flow. Even though we saw the S&P close, pretty much where it started, they were selling the rally. So again, the big boys are selling this right now. It does not mean that we, that the markets have to go down. We just want to kind of take a peek under the hood. So let's take a look at our regular charts here, and you can see this is the moving average. So the Bulls, really just had to go another, 15, 20 points to get there. And instead, they didn't even break these highs. And like I said, they had all the catalysts they need to push it higher. Like I said, I was expecting some type of, little pullback down in these areas or say resistance, but I didn't really expect the markets to go up to these levels and then go down. And the one thing I did mention, and that was in the morning notes, was this was where was it? The 29th. Here's January. Here it is, January 29th. This was when the Japan bank went negative interest rates, and actually I think it was this one, but in any case, from there that was the top. So this is Draghi doing the negative interest rates. Are we going to get the same? You can see we had a very similar candle here too. If I just kind of zoom in on it, this was an indecision candle. Opened up, went down, and they opened up a little bit for the day, and you can see we had the same thing right here. So are we going to get the same response? It would make perfect sense. We actually are starting to get some bearish divergences on the daily charts. If we take so let's do this. Let's say you can really use these as your guides. If they push above the 205 level, then they're probably going to go up to touch the moving average. If they push it below the 1969, then we're probably coming down to the 1932. But let's take a look at some of our other charts here. Bearish divergences, yes, they've been in place. I said that there was a shot that they were just coming up to touch the, do a back test of the wedge here. Came very close to it here. I said that this does happen a lot. Is they come up and back test it before heading down. So we're right in our this resistance zone. Maybe the Bulls are just trying to gather some steam to pop above it, but I don't really see that much conviction, as far as the, buying interest, except for these big gap ups. So it's not bearish yet because you can see we're really consolidating, but it's the fact that every time we get up to these levels, it sells off is definitely is sending up some warning signs. I think these bearish divergences are throwing up warning signs. I think that the money advanced decline starting to level off is throwing off warning signs. So there's a lot of them, but really, I was expecting if the Bears push it through this 1977 and held it below like they did at first, we were going to see some momentum pick up to the 63. Why it rallied here, there's really not a whole lot of technical support. We're not oversold. There's not really, maybe this low, but we only spent a couple hours here, so it doesn't really make a whole lot of sense. But in any case, they rallied it and closed it even. So that's that on, on it, where, the bulls need to push it through this resistance. I'm guessing right now that the Bears need to push it through to 1963 since they already did the 1977 but rallied back up. So maybe the line in the sand for the Bears now is the 1963. Then that would open up the door for a move down to the 1928 level. 15-minute chart. Again, not. More just trying to figure out why they rallied. We didn't even get to the 23% retracement level. Like I said, maybe this support. I'm not really. It doesn't really make a whole lot of sense why they decided to buy. But notice the moving average is trying to cross here. So we have that on the 5-minute chart. We have it on the 15-minute chart. We just really need to see price start to break down and stay down. And it's. I wish I had a better answer for you on these things, but we just know that things are really, really extended on so many different levels that if they did break down, it would make sense. And like I said, I still think that we're going to see this 1930 area be tested, and especially now that we came down this low and bounced up. The next time we're probably, because my original thought was just coming to the 1960 and then up. But the fact that we came here and they bounced up already, the next time they come down, most likely they're taking this support out, and then we're going to get a quick move down to the 46, even to 33. But again, we got to see the Bears can make some conviction to the downside, because we really haven't seen that yet. So on a 5-minute chart, I just really want to go over the bouncing part. What the Bears, they really need to hold things below the 1997 level. If they lose that, then good shot. We're coming back up to the 2004, and then most likely even coming all the way up to these levels here. So was a very, very indecisive day, but it's happening at the top of the chart, so it means people aren't too comfortable pushing the tape higher, but they're not really too comfortable selling yet. So this is really the candle I think you want to keep an eye on. Above 2004, the bulls remain in control. Below 1968, Bears are going to take over and expect to move at least down to the 1932, possibly even lower than that. So with that, hopefully I didn't confuse you guys too much, and have a great night.